Have you ever wondered what it takes to become a self-made billionaire? What sets successful investors apart from the rest? Today, we will be exploring the life and career of Warren Buffett, one of the most successful investors of all time. From his early beginnings to his current status as an icon in the world of finance, we will uncover the secrets behind his success. But before we dive into the details, let me ask you a question. Do you want to know what makes Warren Buffett so special? Do you want to learn about his investment strategies and how he has built a fortune that rivals some of the largest corporations in the world? If so, you should watch this video until the end. Get ready to discover the success story of Warren Buffett. Chapter 1: The Beginning. Welcome to the rise of Warren Buffett, the story of one of the greatest investors of all time. Warren Buffett, also known as the Oracle of Omaha, has built a reputation for his investment prowess and his incredible success story. In this video, we will take a closer look at the journey of Warren Buffett and the key factors that have contributed to his success. But before we dive into the details, let's take a moment to appreciate the magnitude of his accomplishments. As of 2022, Warren Buffett's net worth is estimated to be over $100 billion, making him one of the richest people in the world. He has built this wealth through decades of investing and acquiring companies, and he has become an icon in the world of finance. So, what sets Warren Buffett apart from other investors? What has allowed him to achieve such incredible success? Warren Buffett was born in Omaha, Nebraska, in 1930. He showed an early interest in business and investing, and by the age of 11, he had already purchased his first stock. By the time he was in high school, he was already running a successful business selling pinball machines. After graduating from the University of Nebraska, Warren Buffett enrolled in Harvard Business School, but dropped out after just 2 years to start his own investment partnership. He quickly gained a reputation as a talented investor, and he continued to grow his wealth and his reputation throughout the years. One of the key elements of Warren Buffett's success is his long-term investment philosophy. He is known for his patience and his ability to wait for the right opportunity. He once said, "If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes." This approach has served him well, and he has been able to consistently generate outstanding returns for his investors. Another factor that has contributed to Warren Buffett's success is his ability to identify and invest in great companies. He has a knack for finding businesses that have strong, sustainable competitive advantages and a history of solid financial performance. Some of his most famous investments include Coca-Cola, American Express, and Procter & Gamble. Warren Buffett is also known for his ability to think long-term and to resist the temptation of short-term gains. He once said, "Our favorite holding period is forever." This focus on the long term has allowed him to build a diverse portfolio of companies that have the potential to grow and generate wealth over many years. But Warren Buffett's success is not just about making money. Over the years, he has become known for his philanthropy, and he has pledged to give away the majority of his wealth to charitable causes. He has set an example for others to follow, and he has shown that success can also be measured by the impact you have on the world. So, whether you are an aspiring investor or just looking for inspiration, Warren Buffett's story is a reminder that anything is possible with determination and a commitment to excellence. In the next chapters, we will take a closer look at the key elements of his success and what we can learn from his journey. Stay tuned. Chapter 2: Early Investment Philosophy. Warren Buffett's early investment philosophy was heavily influenced by Benjamin Graham, a renowned investor and author who is widely considered the father of value investing. Graham's approach was focused on finding undervalued stocks and investing in them with the expectation of a long-term return. This approach resonated with Warren Buffett, and he quickly became a student of Graham's teachings. He would later say that reading Graham's book, The Intelligent Investor, was one of the most important moments in his life. He went on to apply Graham's principles in his own investment partnership, and he began to generate impressive returns for his investors. Over time, Warren Buffett's investment philosophy evolved beyond the pure value investing approach of Benjamin Graham. He became more focused on finding companies with strong, sustainable competitive advantages and a history of solid financial performance. He would later call these types of companies economic castles, and he would seek to invest in them for the long term. One of the key elements of Warren Buffett's early investment philosophy was his focus on the long term. He understood that investing was not a short-term gain, and that success would come from a combination of patience and a commitment to investing in the right companies. He once said, "You can't buy what is popular and do well." This focus on the long term has allowed him to generate consistent returns over many years. Another important aspect of Warren Buffett's investment philosophy was his focus on company fundamentals. He was not swayed by short-term market trends or the opinions of others. Instead, he relied on his own research and analysis to identify great companies that would generate long-term returns for his investors. Over the years, Warren Buffett has become known for his ability to buy companies when others are selling. He has a reputation for being a contrarian investor, and he is not afraid to take advantage of market downturns to invest in great companies at a discount. As his reputation grew, Warren Buffett continued to refine his investment philosophy. He became more focused on finding companies with strong brand recognition and a history of generating free cash flow. He would later say that the key to his success was finding companies that I would be comfortable owning if the market shut down for 10 years. In recent years, Warren Buffett has become known for his focus on Berkshire Hathaway, the holding company that he has built over the years through his investments. Berkshire Hathaway is now one of the largest and most diverse companies in the world, and it is a testament to Warren Buffett's investment prowess. So, what can we learn from Warren Buffett's early investment philosophy? Well, we can see that he has always been focused on the long term, and he has always been willing to take a contrarian approach when necessary. We can also see that he has always been focused on finding great companies that have the potential to generate wealth for many years. In the next chapter, we will take a closer look at Warren Buffett's strategy. Chapter 3: Warren Buffett's approach to identifying great companies. One of the key aspects of Warren Buffett's approach to identifying great companies is his focus on their competitive advantage. He looks for companies that have a sustainable edge over their competitors and that have the potential to generate long-term profits. This edge could come in the form of a strong brand, a unique product, or a highly efficient production process. Another important aspect of Warren Buffett's approach is his focus on financial performance. He looks for companies that have a track record of consistent growth, and that have the ability to generate free cash flow. He is also looking for companies that have a solid balance sheet, with low levels of debt and a history of stable earnings. When evaluating a company, Warren Buffett also looks for a strong management team. He believes that a company's success is heavily dependent on the quality of its leadership, and he is looking for individuals who are focused on creating long-term value for shareholders. He also looks for managers who have a track record of making smart decisions and who have a clear vision for the future. Warren Buffett also places a strong emphasis on valuing a company. He believes that it is important to understand a company's true worth, and he uses a variety of techniques to arrive at a fair valuation. He has been known to use discounted cash flow analysis, price-to-earnings ratios, and other metrics to determine the value of a company. Warren Buffett also has a unique approach to risk management. He is not afraid to take risks when he believes that the potential rewards are high, but he is also focused on minimizing the risks involved. He believes that it is important to understand the risks involved in any investment, and to only invest in companies that have the ability to withstand economic downturns. When evaluating a company, Warren Buffett also considers the industry in which it operates. He is looking for industries that have strong long-term growth potential, and that are not heavily impacted by economic fluctuations. He believes that it is important to understand the industry dynamics and to only invest in companies that are well positioned to succeed. Warren Buffett also has a unique approach to timing. He is not focused on short-term market fluctuations, and he is not afraid to wait for the right opportunity to invest. He believes that it is important to be patient and to only invest in companies when the market conditions are favorable. Over the years, Warren Buffett has become known for his ability to find great companies and to invest in them for the long term. He has a reputation for being a contrarian investor, and he is not afraid to take advantage of market downturns to invest in great companies at a discount. So, what can we learn from Warren Buffett's approach to identifying great companies? Well, we can see that he places a strong emphasis on a company's competitive advantage, financial performance, management team, valuation, risk management, industry dynamics, and timing. These are all important factors to consider when evaluating any investment opportunity. In the next chapter, we will take a closer look at how he has generated such incredible returns for his investors. Chapter 4: Warren Buffett's approach to investing in the stock market. One of the key aspects of Warren Buffett's approach to investing in the stock market is his focus on long-term value. He believes that it is more important to focus on the long-term potential of a company, rather than short-term market fluctuations. He is not interested in quick profits, and he is focused on building a portfolio of great companies that can generate consistent returns over the long term. Another important aspect of Warren Buffett's approach to investing is his focus on diversification. He believes that it is important to have a well-diversified portfolio, with investments in a variety of different companies and industries. This helps to minimize the risk of any one investment having a significant impact on the overall performance of the portfolio. Warren Buffett also places a strong emphasis on investing in companies that have a competitive advantage. He believes that it is important to focus on companies that have a sustainable edge over their competitors, and that have the potential to generate long-term profits. This could be in the form of a strong brand, a unique product, or a highly efficient production process. When investing in the stock market, Warren Buffett also looks for companies that have a strong financial track record. He is looking for companies that have a history of consistent growth, and that have the ability to generate free cash flow. He is also looking for companies that have a solid balance sheet, with low levels of debt and a history of stable earnings. Warren Buffett also believes that it is important to understand the risks involved in any investment. He believes that it is important to understand the potential downsides of any investment and to only invest in companies that have the ability to withstand economic downturns. He is focused on minimizing the risks involved in any investment, while still maximizing the potential rewards. When investing in the stock market, Warren Buffett also takes a patient approach. He is not focused on short-term market fluctuations, and he is not afraid to wait for the right opportunity to invest. He believes that it is important to be patient and to only invest in companies when the market conditions are favorable. Warren Buffett is also known for his ability to generate high returns for his investors. Over the years, he has been able to generate incredible returns for his investors, outpacing the broader stock market by a wide margin. He has been able to achieve these returns by focusing on long-term value, diversification, and investing in great companies. So, what can we learn from Warren Buffett's approach to investing in the stock market? Well, we can see that he places a strong emphasis on long-term value, diversification, investing in companies with a competitive advantage, strong financial performance, risk management, patience, and generating high returns. These are all important factors to consider when investing in the stock market. In the next chapter, we will take a closer look at some of Warren Buffett's most successful investments and how they have contributed to his incredible success. We will see how Warren Buffett's strategy can be used as a blueprint for success for anyone looking to invest in the stock market. Chapter 5: Warren Buffett's most successful investments. One of Warren Buffett's most famous investments is in Coca-Cola. He first invested in the company in the 1980s, and it has since become one of his largest holdings. He has been a longtime admirer of Coca-Cola's strong brand, and he believes that the company has a sustainable competitive advantage in the market. Another one of Warren Buffett's most successful investments is in American Express. He first invested in the company in the 1960s, and it has since become one of his largest holdings. Warren Buffett has also had a lot of success with his investments in the insurance industry. He is the CEO of Berkshire Hathaway, one of the largest insurance companies in the world. He has been able to generate substantial returns for his investors by investing in the insurance industry, and he believes that the industry has a lot of potential for growth in the future. One of Warren Buffett's most successful investments in the insurance industry is in Geico. He first invested in the company in the 1990s, and he was attracted to the company because of the ability to generate consistent profits. Warren Buffett has also had a lot of success with his investments in the retail industry. He is a large shareholder in retailers such as Walmart, Costco, and Home Depot. Another one of Warren Buffett's successful investments is in Berkshire Hathaway itself. Warren Buffett has also had a lot of success with his investments in the finance industry. He is a large shareholder in companies such as Bank of America and Wells Fargo, and he believes that these companies have a strong competitive advantage in the market. Warren Buffett has also had a lot of success with his investments in the energy industry. He is a large shareholder in companies such as Berkshire Hathaway Energy and Mid-American Energy. So, what can we learn from Warren Buffett's most successful investments? Well, we can see that he has been able to generate substantial returns for his investors by investing in great companies with a strong competitive advantage. He has been able to identify these companies by focusing on long-term value, diversification, and investing in companies with a strong financial track record. In conclusion, Warren Buffett's most successful investments have been a key factor in his incredible success. So, there you have it, the success story of Warren Buffett, one of the greatest investors of all time. His approach to investing, his focus on long-term value, and his ability to identify great companies with a strong competitive advantage has been a key factor in his incredible success. We believe that Warren Buffett's story has much to teach us about investing, and we hope that you have been able to take away some valuable insights. If you have enjoyed this video, we would be grateful if you could like, subscribe, and share it with your friends and family. And if you are interested in learning more about successful individuals, we have a video coming up about Bill Gates, the co-founder of Microsoft, and his incredible journey to becoming one of the richest people in the world. So, be sure to check that out. Thank you for watching, and we hope to see you again soon.